Hi, Joe Outram here, and today I want to talk about the situation where you're making good sales, but you've perhaps got too little left at the end of the month. So, if this is for you, then maybe you're just wondering, why you're making good sales, but you've just got no cash left, or you're working really hard, but you feel like you've not got much to show for it at the end of the month. Or maybe you do have cash left at the end of the month, but you know it could be higher than what it is. And if that's you, if that is the case, then it's likely that your expenses are too high. Of course, it could be you need more sales for the level of expenses that you need to incur. And maybe you've set yourself at a level of expenses that you can't do anything about for the time being, in which case your only solution is to look at more sales. But generally, the first place we look, if any of those situations is true for you, is to look at expenses because it is likely that they are too high. Now, don't worry, I do have 5 easy action steps for you today to help you reduce your expenses and get back your profits and therefore raise your cash levels. The first one of these is the month end profit and loss account review. Now, I know for some people, going through a profit and loss account, well, it's like looking at a document in a foreign language. But you can have this conversation with your bookkeeper, with your accountant. And it's also one of those things where if you start to look at the figures each and every month, you'll start to understand more because you'll start to see the patterns and you'll start to understand how you're spending in certain areas. But in basic terms, the profit and loss account is easy to read. It is a list of expenses. The bulk of it. So we start at the top with our sales. Then we might take off direct costs, if you have direct costs, that is. Um, that's why I say may. If you don't have direct costs, and you won't if you're not producing anything, if you're just offering a service. And for me, most of my clients are in the coaching space or consultants, therapists, that kind of thing. We're not reselling anything. So we just have the sales line and then we go straight to expenses. But if you produce something and you're manufacturing something or you're buying things in and reselling, then you'll have a little element at the top which takes off the direct cost. So that's the cost of the items that you're producing or reselling. And then all the rest of the documents, the bulk of the document then, when you're looking at a detailed profit and loss account, is just a list of expenses. So reviewing that each month, you'll start to see patterns of, well, I didn't spend that much last month. Oh, why is that figure high? And you can start to have the conversations with yourself, with your accountant, your bookkeeper, your financial coach, or whoever you can talk to. But you can, of course, do this by yourself. You can start to look at how you are spending your money. It's about getting an understanding of where you are spending, where's all your money going. So that's the first thing. The second thing is to review your suppliers. So review all your suppliers for the costs each quarter. You only need to do this quarterly. Um, you know, if you've got say software costs going through, just ask yourself, are you using that software? Is there a cheaper alternative? Is it still valid for your business? And of course, we do this with our personal spending too, but here it's just about your business spending. But it is worthwhile if you're doing this exercise. And some people that run small businesses, I know some of my clients like to do this as a one-off exercise where they'll go through all the business stuff first and then go through all their personal spending too. If that works for you, then that's fine, as long as you are doing these reviews and making sure that you're not overpaying and you're not paying for things that you are no longer using. If you think about it, people like suppliers of, any subscription packages, whether that's for software or anything similar, they give you that discount for buying for the full year because they know if you're paying monthly that you can stop. But sometimes if you need something for 3 months, then paying that monthly element is certainly worth it because, of course, you can then stop at any time. You just need to work out what is best for you. And certainly when I start using anything new, I will click the pay monthly button just to see if it is going to fit in with how I'm working. And if I find myself using it a lot and can see that I'm going to use it a lot in the next 6 to 12 months, at that point I'll upgrade to the annual subscription. Because if not, if you're not using it, you haven't saved yourself any money. You might have got 10 months for the you might have got 12 months, sorry, for the price of 10. But if you're only using it for 5 months, then you've not saved yourself any money. So have that supplier review and review all your suppliers. Then item 3 is a daily cash flow review. So what's that? Well, having a daily cash flow report is about seeing where your cash is going from each account that you have, and you scrutinize it daily. So if you're not used to having a look at your bank accounts daily, then now is the time to do so. And I do this with personal accounts too, because it's the same. We have money going out of our personal accounts, and just like we have going out of our business accounts. So just get into the habit of checking the cash. And for bigger businesses, you'd be able to have bookkeepers and accountants produce reports. But when you're running your own small business, you can just do this by just logging into online banking, or using the app on your phone, and just looking at what you have spent, and just making sure, and this is a good time as well, to have a look at things that you're no longer using. All things going out of your bank account that you don't want them, you don't want to be spending that amount of money anymore. It's for things that you don't want. Now's the time as well to have a look at that, but also just take note of how you're spending your money. And it's about building up a overall picture in your mind and start making your spending consciously rather than being from the unconscious. And it's great in these times where we can have things on direct debit, standing orders, automatic payments, but it allows us to switch our spending habits into the unconscious and to get really efficient at controlling our spending and getting frugal, which is not being tight, and it's just being sensible with money. We can do that the more that we can bring it into our conscious mind rather than just spending unconsciously. And this is one of the best ways to do it. Looking at your bank account each and every day and just making note of what you're spending. So it's not just about looking at the balance, it's about just having a look at those transactions that have gone through as well. And it's a great habit to get into, and just builds up that overall control over your money. And it is one of the main money habits that I get people to start practicing, to start getting into that habit when we start looking at taking back control of their finances. And then the fourth item is a budget, or some kind of financial plan, whatever you want to call it. And it's about creating a budget for all the cost lines for the next financial year. So what do I mean by cost lines? Well, each clump of expenses, like telephone costs, will be one cost line. Postage and stationery might be another cost line. Computer running costs, that's a group of expenses. So that's what I'm talking about there. And what you want to do is set a maximum amount to spend on things per month. So give yourself a budget for each of those items. And for things like your software each month, it's probably pretty much based on what you're spending now. And if you're spending quite a bit, you might not want to increase that. So then if you find a new, you hear about a new shiny new object of this new fantastic software, you're not just automatically going to just click the button and buy. If it's going to take you over your budget, this is where sensible spending plans come into place. You can have a look and say, well, if I want that, what can I take off my spending? Because I can't go over this certain amount. And of course, if you really needed to, of course you can, but then you're making that decision consciously. It's also good to set a maximum amount of spending for things that maybe you just buy ad hoc. So there's loads of like $27, £37, whatever. These courses that you see on social media, and you think, oh yeah, I could use that, and it's only a small amount of money. Well, those kind of small amounts of money, they do add up. And I'm not saying these courses aren't worth it. a lot of them have such great value, but they're only great value to you if you need it and you can use it and you can afford it. And that's what you need to be asking yourself. But maybe you want to set yourself a budget, and the more money that you have, I think the more likely you are just to click the button. But you might want to set a limit on, well, I'm only going to buy 2 or 3 a month. Then you're not overspending. Give yourself some control over that money rather than just spending any old how and then wondering where all your money has gone. Because I often see these things when people say, well, have I spent that much money on like training or maybe computer costs, and particularly with things like training, I'll say, well, you bought this course and this course and this course, and you can see the look on people's faces, and it's almost as if they didn't realize that they'd spent that much. Oh, did I buy all of those? And they might not have even opened some of them, might not have logged in. And just also, I think when we do spend lower amounts of money, we don't realize that actually when you buy one, it's cheap. When you're buying 10, it's not as cheap because your spending's increased. So it is good to have this little budget just to give yourself some control and some guidance for yourself as to how you want to be spending your money. So it's all about taking that control back and bringing our spending habits from our unconscious into our conscious minds. And then the last item that I want to talk to you about today is the budget variance analysis report. Accountancy speak, I know, but it is simple, believe me. It's not complicated. It's just a fancy name that we have. But basically, it's just a report when we're comparing what we actually spent with what we budgeted. Now, if you use accountancy software and you put your budget on that software, and not everybody, and I appreciate, does this, because sometimes we have more line items in our analysis on Sage or QuickBooks or whatever we're using than we have in our budget. So people don't always put things in, put the budget onto the QuickBooks or Sage, and that's fine. I don't. I just have my budget under broad heading, so it doesn't go onto my Sage accounts. But if it did, then you could run this. You'll probably be able to find a budget variance analysis report somewhere in the report section, in which case you can just run it off each week just to make sure that you're on track, or at a minimum it should be run at the end of the month. And you do this and it becomes more easily to spot where you have overspent when you do that. But you can do this, just write it down on a piece of paper, on a spreadsheet, anything like that. So you just take the items that you spent on your budget, compare it against the amount that you actually spent, and you could run off a profit and loss account report from your accounts. Whether you do it on a spreadsheet, you can just do a quick analysis and tot up all the just add up all the expenses per line. So, all the telephone costs together, all the computer running costs together, all those subscriptions together. Or, if you're just doing your books yourself, but if you're doing them even if you're doing them yourself, but if you're using something like QuickBooks or Sage or Xero or one of the accountancy packages, then you can run off a monthly profit and loss account report and just compare the expenses, because we're just looking at expenses here. Just compare the actual amounts you spent with what you budgeted. And then it's just looking about where you've overspent. If you've underspent, that's great. Give yourself a pat on the back. But if you've overspent, it's looking at why. And often there are legitimate reasons why. And sometimes you might overspend one month but underspend the next. So you just make these do this little analysis. It could be done in your head. You can just jot things down, make notes, and just again become consciously aware of where you're spending, and how you've spent, and where you've overspent. And if that does seem a little bit too complicated for you, then this is a conversation that you can have with your accountant if you've got some sort of monthly package. I run a virtual CFO package with some clients, and this is the kind of thing that we talk about on our monthly reviews. I look at what did you plan on spending? This is where you overspent. Do you know why you overspent? And if you did, is it something that you've consciously thought about, and was it something that you really needed? And if not, then you can make adjustments going forward. You can reduce your expenses that way. So they're the 5 things that you can do to have a good review of your expenses. So it's making sure that you look at your profit and loss account each and every month, making sure you review your suppliers quarterly, have that daily cash flow review by logging on to your banking app or on your PC, laptop, having that budget for each month, and then just doing that budget variance analysis as well once you've got your monthly profit and loss account. And then that's it. And in most cases, we manage to find, when I do this with clients, we manage to find money where they are overspending, and then they can stop spending, give themselves some time to breathe, have that, being able to enjoy that extra income that's left at the end of the month for the coming months. And then they can also be working on increasing your income. But you don't want to be just increasing your income and having that be an excuse for just spending more and more on stuff that you don't actually need in your business. It's about profit at the end of the day, and you want the most amount of profit available to you. So one of the ways that we can do this is looking at expenses. So I hope that's helped. So a little bit practical in today's session. But if you do need any help with any of these, then please do let me know. Just give me a shout, send me a message via the website or social media, and I'll see how that I could help you. So until next time.